Good day, Professor. So, we are the team Chester, and we are here to present the performance and strategy review for about round 1 to 8. And my name is Raquel, together with my teammates, Fersalito, Christine, and Crisabay. So before we begin, we would like to acknowledge that we are gathered on the traditional, ancestral, and unceded territory of the Coast Salish peoples, including the territories of the Skims, Squamish, and Tsleil-Waututh nations. We honor their stewardship of this land and are committed to working in a ways that respect indigenous community to their connection to this land. So this is our agenda for today. So these slides introduce the Chester Company situations. It states that the Chester faced the early difficulties but is now trying to recover with a new plan. So the company is in a serious crisis, so especially with its inventory and finances. So early financial stage losses and problems with how it operates set the stage for this challenging recovery. So the crisis worst because of inventory issues, which made the financial problems even more the severe and required immediate action. So to recover, Chester plans to use the lean practices, and focus on improving its cash flows to establish the company. So this slide focuses on the challenges encountered in the first two rounds. So in this early stage, Chester dealt with the significant difficulties in managing its inventory and maintaining financial stability, which provided the important lessons for the future improvement. So, specifically, inventory costs went up, which led to a decrease in revenue and made urgent strategic changes necessary. So the company learned about its operational inefficiencies and the need for a stronger system to control inventory. As a strategic advancement, implementing the dynamic pricing strategy is suggested to help to solve the inventory problems and improve the cash flow. So this slide shows a stock price chart for round 1 up to 2026 and explains Chester performance. So Chester stock started at $34.25 in 2025, just like all the other stocks shown. So however, by 2026, Chester stock price dropped significantly to just $1. So this sharp decrease means there was a major loss in the value of Chester stock during the initial period. So this slide shows a stock price chart for round 2 up to 2027 and explains Chester continued performance. So after its dramatic drop to $1 in 2026, so Chester stock price did not recover in 2027. So it remained at $1. So which confirms a continuous period of a very low value for the stock and suggests that hasn't been any positive market response or improvement in the company's underlying business. And that's all for my part. Thank you.
Hello, my name is Christine, and I will be presenting about rounds 3 and 4. In this phase, actually, Chester Company faced deepening debt and lingering inventory issues. Yet, there are some positive indicators that emerged that offered a glimpse of hope for recovery. Significant losses were recorded, but sales began to stabilize, indicating potential recovery. Understanding market demands became crucial, leading to strategic adjustments in inventory management. So, for our future strategies, implementing cost control measures and improving cash flow will be essential for sustained growth moving forward. As for round 3, as you can see in our graph, Chester's stock price continued to hold at $1 in 2028 after having settled at this low point in 2026 and maintaining it through 2027. So, this consistent pricing at the minimal value further establishes a pattern of prolonged underperformance or a fundamental shift in the stock's perceived worth that has no upward momentum visible. In the case of rounds four, extending the prolonged period of low value, the Chester stock price remained fixed at $1 through 2029. Well, this consistent trend from 2026 onwards that has no fluctuations suggests that the stock has reached the floor where it continued to trade at a negligible price and indicated the persistent lack of investor confidence or the significant growth prospects.
Hi, I am Chrissy, and today I'm going to present the rounds 5 and 6. Rounds 5 and 6 revealed critical execution failures, leading to recurring emergency loans and an urgent need for a solid recovery strategy moving forward. Emergency loans were necessary to maintain operations but lead to further financial strain and uncertainty. Fragile inventory management resulted in excess stock, causing cash flow issues and impacting overall performance. Implementing strategic adjustment is essential for sustained recovery and long-term stability in future rounds. And now for the rounds 5 stock price. As you can see in our graphs, as the data extended to 2030, Chester's stock price maintained its steadfast position at $1. This continued stability at such a low price point, now stretching over several years from its initial drop in 2026, points toward a deep seated stagnation or a situation where the stock's value has effectively bottomed out, with no signs of revaluation. And now let's take a look at the round 6 stock price. Into 2031, Chester stock price showed no deviation from its long-standing $1 valuation. Having fallen to this level in 2026, it has consistently remained there through all subsequent years, further solidifying the perception that Chester stock is either illiquid, has minimal intrinsic value, or is simply not attracting any buying interest that would push its price higher.
Good afternoon, Professor. This is Percy. So, for the round 7 review, this slide provides a concise overview of our performance in round 7. As you can see, the outcomes reflects uh, mixed signals, with some areas improving while others saw a decline. Overall, we experienced a decline in probability and pace increased operational inefficiencies through the period. This way, largely due to identified execution failures within key products or project rather, leading to missed opportunities for vital improvement and recovery. Therefore, a comprehensive reevaluation of our approach is absolutely essential to address this persistence, execution gaps, and better align with our long-term goals as we move forward. Moving forward on this part, our stock performance for round 7 or the year 2032 that clearly illustrates a challenging reality. Chester stock price continued as an interrupted trend, holding firm at $1. This extended period of flat, minimal valuation, evident from 2026 onward, points to a consistent lack of market catalysts or fundamental changes that would positively impact our price. Essentially, our stock remained firmly anchored at its lowest possible value, reflecting a persistent lack of investor confidence. due to the financial struggle we've discussed. And now let's look at our recent round 8. In this pivotal phase, our focus shifted toward the financial stabilization and enhancing operational efficiency. Our primary aims was to correct the misstep from previous round and lay a solid groundwork for long-term growth and probability. Regarding our financial outcome, we prioritized emergency loan repayment issued to new debt and implemented aggressive cost control to establish our cash flow. Our key learning from this round reinforced that past miscalculation in automation and product mispositioning were costly, emphasizing the critical needs for precise R&D execution and better forecasting. Consequently, our strategic adjustment involved aggressively repositioning our products, scaling back unnecessary automation, eliminating underperforming products, and making crucial investment in TQM, HR, and targeted market to optimize our future performance and ensure sustained improvement. And now, looking at the stock price performance for round 8, extending to the year 2033, the data confirms a persistent pattern for Chester. Our stock price remained stubbornly at $1. Following a sharp decline in 2026, it has maintained this remarkable stable, albeit extremely low, price through the entire observable period. This long-term consistency as such a minimal value suggests either a complete loss of investor interest or perhaps a fundamental reevaluation of our market worth to this very low point. It is highlights that the significant challenge we face in rebuilding investor confidence and demonstrating true shareholder value.
So, in conclusion, round 8 has been the most critical turning point in Chester Company's performance history. Our top priority is repaying the $53,452 emergency loan that we had on the first round. Well, this round has corrected years of operational missteps in its production, R&D, marketing, HRTQM investments. Having the strong execution, we have achieved its first sustainable positive net profit. These moves has set the stage for long-term efficiency, higher contribution margins, and the future market competitiveness. Better execution led us to improve financial, customer, internal, and learning and growth metrics. The future rounds has included rigorous review of reports, competitor strategies, and market conditions to staying agile and responsive.